Hi there. Good news for PayPal shareholders. The business is resilient and the growth rate has come back. If you look at the latest results, you can see that their total payment volume has increased by 11% year over year, revenue by 8%, and most importantly, their net income has increased by 10%. This is great. This is quite great. The growth rate has returned, which means if they continue in this way to report for this year 2024 a growth rate in their net income and total payment volume around 10% or higher, then the market cap can go up a lot. As you can see, the stock price year to date has increased by almost 1%, but still the stock price is down 40% in the last 5 years. Of course, from its highest peak during the pandemic, the stock price has declined by over or almost 80%. Now, in the long term, if they continue to report a growth rate around 10%, or let's say between 5 and 10%, then the stock price can come back to $300, of course, in the next 5 to 10 years. Don't think that this will happen overnight, this year or next year. In the next 5 to 10 years, you can see the stock price back to $300. Only if they keep delivering this great growth rate, around 8 or 10%. So if you look at their numbers, they are quite great. For the second quarter of this year 2024, they are quite great. As I said, total payment volume has increased by 11%. You have to look at the most important indicator, total payment volume. When total payment volume goes up, also the revenue increases by 8%, as you can see, and their net income. You can also see an increase of 10% year over year. And that's great, quite great. Of course, the most important indicators, as I said, are the total payment volume. You have to see an increase in this number, and then you have to look at the other indicators. The second one is active accounts. You have to track this number because it's quite important. The more users they have, the higher the total payment volume goes, and their net income or their final earnings go up, which means the stock price can rebound back to $300. So as you can see, the active accounts has increased a little compared to first quarter 2024, from 427 million to 429 million. This is great because you don't see a huge decline in their active accounts, in their users. They are stable. Of course, if you compare it to 2022, at the end of 2022, Q4, the number of active accounts was about 445. It has declined a little to 26, but then it has rebounded. And this is a good sign. This digital wallet is still used by many users, especially in the US. And that's great. Then the second important indicator is the total take rate. As you can see, for the last quarters, from Q1 2023 to Q2 2024, this total take rate has decreased from 1.99% to 1.89%. Now, this is bad if you look only at this indicator, total take rate, because if they charge less for the products, a lower fee, then their net income, their final net income and revenue will be lower. But be aware that as long as the total payment volume increases, you see a higher growth rate in the total payment volume, then this small decrease in their rates is not that a big problem. If the growth rate of their volume is over 11% or 10%, and you see a decline in their total take rate about 2%, they are still doing great. They can grow this business by 9% or 8%, which means in the long term, as I said, the stock price can go back to $300. But of course, you have to see an increase in the total payment volume. if you see a decrease in this volume and also the total take rate plus a decrease in their active accounts, that will be a big problem, a question mark, which will mean that PayPal won't be able to go back to $300. So you have to track these numbers, especially total payment volume and active accounts, which now are rebounding and they are doing quite great. So PayPal is on track back to their growth rate. Moreover, you also have to look, let me show you. Here, yes. You also have to look at their guidance. They expect for 2024 the free cash flow to be about 6 billion. 6 billion. This is quite great. They're also doing some buybacks around 6 billion, so they use their free cash flow to do more buybacks, and that's quite great. This means that you get about 10% only from buybacks, as the market cap is around 66 billion. Of course, if the stock price goes higher, then your return will be lower. But if they succeed to buy at this low price, then your return only for buybacks will be about 10%. Then you can also see that for their earnings per share, they expect an increase of about $3.88, an increase compared to the prior year of $3.65. And this is quite great, quite great. And also for the next quarter, third quarter, the revenue is expected to be mid-single digit growth. You will see a growth rate around 5%, quite even higher. So if you only look at the free cash flow for this year, what they expect, 6 billion in free cash flow, and they use all that money to do buybacks, the stock price, at the current level, this company is likely to deliver a 10% annual return over the next 5 to 10 years, quite even higher, if they succeed to increase their total payment volume and increase their earnings. Moreover, if you look at this industry, the digital payment industry in the US, you can look at different statistics. You can see that it is expected a compound annual growth rate about 9% for digital payments worldwide. In the US, that growth rate is even higher. You see a compound annual growth rate about 13%. And the major players are PayPal, Apple Pay, Google Pay, Chase, JP Morgan, and Cash App, from Square. You probably know that company. And this is great, as you can see here, forecast data period, 2024-2029. So, as I said, if their total payment volume keeps growing by 10% or 14%, as the market expects for this industry, 14%, even though you see a decrease in their total take rate, let's say maybe total take rate will go to 1.5%, PayPal will still be able to make money, to increase their free cash flow and deliver it to shareholders. So from 66 billion, the market cap is likely to go to 100 billion or even more if they keep growing, if they maintain their position, their active accounts of about 400 million. You don't see a decrease in this number. You see around 400 million or even more, 450 million maybe. Then PayPal is likely to do well in the future. Of course, if you want a higher return, let's say over 10%, 15% a year or 20%, then you have to wait for another decline in the stock price. Maybe when the market cap goes to 50 billion, that will be a great buy for PayPal, in my opinion, at the current numbers, at the current valuation, and what they deliver so far. PayPal will be fairly valued at 50 billion. You will get a nice return if you are able to buy this company about 50 billion in market cap. Of course, at the current level, it's not bad. You still get a nice return. But it depends on your valuation, what return you want from your investment. If you want a higher return than 10%, then wait for another decline. As I mentioned, if the market cap goes around 50 billion, you are likely to get a nice return from this investment. So that's it for this video, and if you have other questions about this company, PayPal, or the competition, please let me know in the comments.